A stock market correction is defined as a 10% decline from a 52-week high, and generally when people refer to market corrections, they are referring to one of the major indexes dropping by this amount. That's either the Dow 30, the S&P 500, or the tech-heavy Nasdaq. Today what we saw in the market was a lot of selling, and the Nasdaq was the first of the major indexes to correct, dropping 10% in just a few trading days, which begs the question, is the S&P 500 the next index that will correct? Now here is the QQQ, which is an ETF that tracks the Nasdaq, and it is by far the most popular way for investors like you and I to invest in the Nasdaq index. We can see that in just a few trading days it's down over 11%, which is a drastic drop in such a short time frame. But on this chart I have three things listed that I want to touch upon, and this will help us gauge whether the S&P will also be following suit and how we as investors could prepare for this. Now guys, before we get down and dirty with this topic, consider hitting that like button down below if you enjoyed this content and if you want me to make more videos on the general broader market when we see days like this especially. So let's pop the charts up back on the screen here, and let's start off with number one. The first thing that we see is that it has come down to its first support level, the 50-day moving average on the daily chart, and if we zoom out we can see it's come down a few times to test this level over the last couple of years. But more often than not, when we do come down here, we see us break past this support and head much lower, typically to test the 100-day or 200-day moving averages. Now there's a few instances of us actually holding the support, but a big reason I think we may be heading lower here in this particular case is because of the second point I have here on the chart, volume. Volume has picked up quite a bit recently, and this is some of the largest amounts of volume that we're seeing since the market crashed back in March. Investors seem to be afraid of losing any gains they've accumulated over the recent months, and emotion seems to be taking over here, leading to even more selling. Typically when volume is high, we break support levels, so this leads me to believe that there's a good chance we're heading lower here on the Nasdaq over the coming weeks and months. Finally, we look at the third label here, we can see that we went from an extremely overbought level on the stochastics to now a more reasonable level. But personally, I'd be waiting for this to level off a bit more to truly see where we stand here with the markets. Now this indicator here, the stochastics RSI, is just a nice to see for me. I don't really use it to make or break my decisions, but it does help in making a buy decision for me personally, which is why I like to watch it. So what do we want to look for here, and what do we want to see on these charts to give us a signal whether we should be buying or not? And well guys, I can't really give you the definite answer there because I don't have a crystal ball, but let me share with you what I'm looking for. First, I want to see the index consolidate. In other words, I want to start seeing it moving sideways for a bit, as this will signal to me that maybe the selling pressure is done, at least for the time being. Then I want to see volume start to decline, and this will signal to me that again, less people are selling and we could have found a bottom here. Finally, for the stochastics, I want to see it level off and then start moving higher, and this will indicate a shift in momentum to help me gauge the general sentiment of the index here, and as a result the stocks in that index. Now the Nasdaq so far this year has been a big winner. It's led the way among the indexes and is up 25% year to date, despite all of the stuff we've gone through this year. So guys, a pullback here in my opinion is very normal and should be expected, because indexes, just like stocks, don't go up in a straight line like I've said before. They typically move in waves, they move up and down, but generally over time, over the long term, the broader trend tends to be higher. Now I'm just kind of looking around and I came across this very interesting market stat that I want to share with you, which may actually put your mind a bit at ease here during this time of selling. There has been 26 market corrections since 1946. Well, actually just a little bit more than that since this data has been released, but the average correction has seen a decline of around 13.7%. Now note this data is about the S&P 500, so it's not exactly the QQQ, but we can definitely use this data to keep us in check when markets correct. The good news here is that it very rarely takes a correction turn into a bear market, which is over a 20% decline. So the likeliness of us actually seeing another bear market this year is low, not impossible, but low. Also on average, I read that the recovery here from this takes about 4 months, which happens to be a bit ironic. In just 2 months, we have a big event, the US elections, which will move the market whether we like it or not. There's one thing that the market absolutely hates over everything else, and that is uncertainty. And with the elections, there's a ton of uncertainty. And until that's cleared up and we have a clear winner, which is when the elections pass, I expect volatility to be high, and I expect a lot more of these sell-off days to really consume us in the coming months. But guys, don't think that as a bad thing. Don't think volatility is bad or selling is bad, especially if you're a long-term investor, because over the last few months, let's be real, there has not been a whole lot of buying opportunities. If you wanted to go into great blue chip or stable companies or disruptor companies, the opportunities have not really been there. But when we see sell-offs like this, that's when you can take a look at high growth names, disruptive names, large tech companies. All of these stocks are correcting, and you're getting better deals now than you have been in the last few weeks, and possibly in some cases months. So unless you're a short-term investor or trader, which is something that I heavily advocate against on this channel, I focus on long-term investing, you should be taking this opportunity as a great buying opportunity. But anyways, all I wanted to get across was that 4 months recovery seems to be playing pretty nice here with what's going on with the election. So what we could see happen is, for the next couple of months, we see the markets move sideways or continue moving down a bit slower here. And then once the elections pass, we have the results, the market's happy once again, then we start moving higher. If that does happen, it'll give us a good window of buying opportunity to actually funnel money in over the span of a couple of weeks. And really, I'll take whatever I can get here in this market. But guys, so far I've only shown you the NASDAQ index, and the question that you may want to know here is, will the S&P 500 also follow suit and correct? So far the S&P has corrected 7%, so not as much as the NASDAQ, but it's approaching that 10% level here, and volume has been picking up recently, but it isn't spiking too high like the NASDAQ was, mainly because we have a lot of non-tech stocks here that are still holding fairly strong. The stochastics for the S&P show a similar movement as the NASDAQ's, which was very overbought, and now we're dropping back to more oversold levels. So the S&P overall so far isn't looking as bad as the NASDAQ, but if the NASDAQ keeps selling off, it will most likely pull down the S&P 500 with it into correction territory of over 10%. In my mind, I think there's a very likely chance that we see the S&P drop to around 10%, maybe a bit lower than that, especially if selling continues here in the NASDAQ and these big tech stocks continue to dump here day after day like we've seen in the last few days. And at this point, you just have to understand that's just how the market is. And then instead of fighting it, instead of getting upset and all that kind of stuff, just take it for what it is. Sit down, digest the information, and figure out a strategy that works for you, which you can then use to take advantage of these price movements. Now, I'll say this, I am starting to see a few deals pop up here and there, and I am interested in a few stocks here and there as well, which I will probably start buying in the next few days, if not weeks. Now, those in my VIP membership group already know the stocks I have been buying recently, and funny enough, those stocks have been doing fairly well here today. But now it's time, hopefully, to put money back into my favorite types of stocks, which are high growth, tech, disruptive companies, and maybe Tesla is one of them. We'll have to wait and see. But anyway, if you are interested in joining that VIP membership group, link is in the description down below. Either way, guys, hope you enjoyed this video. Let me know your thoughts on the market in the comment section down below. But either way, don't forget to invest positively, and I'll see you in the next one.